Good evening, all. Ira Epstein with your SPDR ETF stock market review. And this review is for Wednesday, the 18th of January. I don't know why I want to say 23rd. It's the 18th of January, 2023. I did that before and I had to restart a video. All right, schizophrenia day. That's what I want to label it. This morning for my full subscribers, those that pay for my research, I wrote, is the glass half full or half empty? And I went into a whole dissertation about today, and it was right on the money, as it turns out. Let me explain it. Today, the market got what it wanted. Retail sales slipping a little bit. PPI slipping a bit. The beige book came out in the Fed district showing moderation. So the Fed's work is doing what it's supposed to do. Now, the market has been fighting the Fed literally since March, April of last year, as you know, trying to get the market to go up, saying the Fed is wrong, it'll pivot, it won't let the economy go into a deep recession, blah, blah. Now that things are starting to show winding down, the market breaks as hard as it does today. What was that about? Is it buy the rumor, sell the fact? To a degree. Did the market get ahead of itself? To a degree. Have we changed the whole picture? No. Do I still think the Fed's going to stay and go definitely February hikes and probably two more after that? Yep. Would I be surprised if the argument doesn't pick up? Should it be between 25 basis points and 50 Feb first for a hike? Nope. Which camp am I in? I'm in the 25 basis point camp because things are softening and the Fed doesn't go very aggressive. Now, some of the Fed members would like to get it so they can get this thing done sooner rather than later, but that's not what I think the Fed does. They'll play it cautious, but they'll stay longer than they probably should with high rates, but that's how it's got to be. Do I think the Fed can ever get back to 2% inflation in say a 2-3 year period? No. Flat no. I think that's a dream. It's a nice goal. We all have goals. I want to be a billionaire. Okay, it's a nice goal, but doesn't mean you're going to hit that goal. You get what I'm saying? So it's easy to say 2%, but I think that's old world. I think the new world is a number probably between 3 and 4%. I think that you probably end up with interest rates between 5.25% and 5.5%. to see what's going on unless something rears its head, but we're not seeing that right now. All right. The other thing is you've got to learn to pay attention to embedded readings. Now, that happens when a momentum indicator called, and the way I use it, the slow stochastic, certain numbers either line up over 80 or under 20, and it's either bullish or bearish the way they line up from there. And you're going against the Bollinger Band. Now, the Bollinger Band concept's pretty simple. It's pretty universal. People look at the band and they go, hey, you won't stay over or under the band more than 5% of the time. The algorithm will adjust to the market. It becomes an absolutely natural resistance support point. If you embed, you can run the band. If you don't embed, you hit it and you generally back away. I teach all this in the course, which I talk about right at the end of this. Goldman Sachs, it's a pause day. It's not a trend change day. It's a pause. The market stepped back. It still has a pattern of higher lows, higher highs. Where's the market at in relation to the 18-day average? Folks, you don't see it fighting there. I will tell you over and over, markets pay attention to the 18-day average. If you're down, you rally to it, it's resistance. If you're above it, it falls back to it for support. And from there, it tries to figure out what to do. But it's not just that. You then go to your Bollinger Bands. And the market will only stay over these black bands 5% of the time or under them. Here is where you can run them. And that can happen. But it's often accompanied when, remember what I just said? The slow stochastics will embed with it, so you get an inkling as to what it is. And when they lose that reading, it's where the correction often, I'm not going to use the word always, often, gives itself up because the momentum's popped out of the market. Well, in this market, you never embedded. What you did is you got up to the Bollinger Band and the suckers were buying over that market. You're overbought, they're buying. they're paying you right back. Embed, and I have a whole different opinion. But you didn't embed. And I spent today telling traders in my updates, hey, folks, get your money ready. We're going to buy if it stays embedded. Did I have markets that were bought? Yeah. Did they lose the embedded reading today? Some did. Did I lose, or did the client lose? Yeah. Nothing wrong with that. Cents, not lots of dollars. You'll see that. In LIT, you're overbought. You hit the upper Bollinger Band. Let somebody else own it. You haven't embedded. That's the natural spot to come out. Same in Apple. We just talked about it yesterday. I think you're in a resistance area. I don't think it's going to go to the upside right here. I think now it pulls back. It has to make a decision on the next break at 130.83 or thereabouts. Is the market worth buying? If it loses the overbought status, it probably is. Then we get to AMC. You're not going to get me to tell traders to ever buy over a Bollinger Band. It is not going to happen. And if you're overbought, like you are and not embedded, out. Plain out. Do something else. And that's how I look at it. By the way, that movie theater chain that I was looking for, I don't think I mentioned it yesterday. I'm not sure if I did or didn't. It's called the Alamo. So that's the first new one that I've seen opening. Now, their history is also, they have had bankruptcy just recently, but they got a good deal near Wrigleyville. If you don't know Chicago, that's where the Chicago Cubs are, the Wrigley Field, and they're right over there. It's a hot area. It's only 6 screens. It's a brewery too, so we'll see what they do. I have zero faith in this stuff. When we come to XLF, you've got a higher high and a lower low, and the market today, I think, was a buy coming in. All right, so I'll take you back to it. Let me get back to XLF here. We'll come back one day. So you were embedded. This is that pattern. I think the market's a buy, and if it loses the pattern, there's a number. If it's under 79, out you go. Does that look like you could have been killed? I don't think so. Will you lose on trades? Of course you're going to lose on trades. Will you make on trades? Of course you're going to make money on trades, all right? I mean, anybody can throw a dart. They're going to have winners and losers. The name of the game is come out when the market's against you and regroup, and you'll go at it again. It was small. To be wrong, that's how I want to be wrong. On XLI, no. You had a chance here. Again, were you going to embed? So we only had day one of embedding, not the day before. Both numbers not over 80, both over 80, 2 days. Now today's the third day. Didn't do it. Goodbye. So I was telling traders, hey, if you get the third day, I'd be looking at today in a big way. XSD, is it embedded? Now let's take a look. I think it is. Day 1, 2, and 3. Yeah, you got your embedded reading. Okay, so now tomorrow's a big important day. There's a setup that if the market falls tomorrow, there's numbers you buy, teach it in the course. You plot it right on here. You're not figuring them out. They're going to plot right for you with your charting software, not mine, by the way. And I don't have to give it to you. You have it all on yours. It'll be there. And that's, yeah, I think it will be a buy on a pullback. I think the probe's going to happen. Now, the home builders. Today, the home building index slipped a little bit again, or did it? No, it jumped dramatically. And guess what? Did you see the mortgage numbers that came out today, all the indexes? Right through the roof. You know what mortgages did? They fell to 6.04% today. We haven't seen that kind of number in a very long time. I am not saying people are rushing out at 6.04% and jumping in the streets. But I am saying it is not near 7%. And that gives people a ray of hope. But this type of action where you come in and you close near the day's low on a big break often leads to losing the embedded reading. So you pay attention to that, and if you see that happen, you walk away. In addition, all the market did was go up first. There are rules for my technique, and this violated all the rules to be a buyer. In XLE, same thing. You don't want to be a buyer. You're a higher. No. This is right against the Bollinger Band. You're probably going to slip back, and that's what's going on there. Now, if gold closes under 79 tomorrow, I'm wrong being long. Until that happens, that's not the case. It did close near the day's low. It's going to be under pressure on the opening. Then the question is, does it lose it or keep it? But you got to wait to the end of the day to know that. In SLV, what did I say just recently? I took my arms and I wrapped it around price here and I said, folks, you are getting so tight in that you're just going to spin in this. Whenever you go sideways like that, you don't go anywhere. You get false moves up and down. Tell me that's not what you're exactly doing. I am friendly copper to prove me wrong, and copper's going to have me on the run tomorrow. It closed on the day's low. If it drops, and it probably will open steady to lower, is my guess, you will probably be at 80 or slightly under. The close is going to be crucial to this market tomorrow. I am watching it very, very closely. TLT, this is a day, in my opinion, where the pros came out of the market. You're up to the upper band, about to challenge 200-day average. So long, let the other guy own it from this point. UUP in the dollar index, outside day up. Give it a chance to do its thing. Is it embedding? Well, both numbers were under 20. Both numbers the day before under 20, and the day before they're under 20. So you've just had it. Today was the third day. So tomorrow's the day that you take a look. I always let the first half hour of trade go by me, and then I'll make the decision and put out the trades for the people. You'll say, why do I do that? I like the fund money to come into the market, the foreign market. That first half hour of trade is where that occurs, and then the market seems to settle out. Just something I've learned over many years. In FXE, is it going to hold on or not? Tomorrow on the opening, we'll find. The odds favor, because you closed on the day's lows, that it's going to lose the embedded reading early. Does it make it back? And if it stays lost, then the odds favor you're going back to the 18-day average to regroup. So you put this all together, you come up with game plans, you understand them, and you pay attention to rules that you can use, either that I've developed for you, you develop. Never trade off the seat of your pants. It won't work. Don't trade the news of the day. It won't work. It's already discounted. Trade chart action or something that you've got an idea. You've got to have a game plan. And with that in mind, I want you to look at this, because here is a game plan for you. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software, so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.